Hello and welcome to Pro Trader Strategies market commentary for Monday, August the 3rd. We are in the dog days of summer. Well, how does that impact the overall markets? Well, we usually see some pretty major pullbacks historically, except for in 2018 maybe, in August, as it is a really typical of summer markets where there's low volume and the markets usually have a tendency to come off a little bit in August. So we're going to have to keep our eyes on the data and see how that impacts the overall markets with our market analysis. So let's get on with the overall economic data across the pond. We got some PMI numbers, pretty good across the board, all above 50 except for no, they're pretty much all across the board, any ones that we're really considering looking at. But that's not their main economic data point. We remember the PMI numbers for Europe is the flash estimates, and this is just the final reading that we got there, and they stayed all above 51 and mostly beat on the estimates there. Now moving here back into the United States, we've got our own manufacturing PMI in the form of ISM, which is the Institute for Supply Management. That's the one we really look at. It came in at 54. Remember, anything with these PMI numbers, expansion is anything above 50. Anything below 50 is contraction. So during this pandemic, we saw those major dips below 50, starting to recover now, back above. Also, something really crazy, new orders came out at basically a 2018 high, which is just something that you wouldn't really expect with the shutdowns and everything else. New orders, knocking it out of the park, I think really surprising everybody to the upside with that, giving the overall markets a bit of an extra leg up, as we already came into the day with pretty good bullish sentiment. Those two economic data points really pushing this higher. One wet blanket on the overall economic data was construction spending coming in at 0.7%, a negative 0.7%. It was expected to be a positive point or a positive 1%. They did revise last month's number up also. And then ISM manufacturing paid slightly higher than expected at 53, expected to be 52. And throughout the day, we got Ward vehicle sales, which is going to be something very interesting. A lot of supply on the market right now, coming onto the market with Hertz basically dumping a lot of their automobiles onto the market. This is a good environment to go out there and buy a car. It seems like with low interest rates across the board and this high supply may give you the opportunity to have some price demand. It's a buyer's market in a sense with the extra inflow of vehicles due to Hertz and some of the other, it's not even just Hertz, it's some of the other car rental companies as well. All right, so let's get on to the overall markets. We've got crude oil back up again today, up 78 cents, but back into the 41 handle. Does not look like we are going to break down into those 30s anytime soon. We were getting a little bit sketchy there for a little while, but it seems like it wants to hold on to the 40 handle as people are out traveling. It seems like more people road tripping in their car rather than getting on an airplane and traveling for the summer, but that is going to drive some of the demand for gasoline. Although we're seeing a drawdown mostly in gasoline, mostly a drawdown in crude oil, we're seeing builds in gasoline, distillates, and things of that nature. So it seems like the refiners are just breaking this product down and storing it into different buckets, which is making it look like it's a little bit more buoyant than what maybe one would otherwise go to believe. When we see drawdowns, especially in distillates, that's where you're really seeing the demand come in for that crude oil. All right, bonds off by almost a point right now on the day, but again, we've talked about this. It is still in that 180 handle, which is where the sweet spot is. 10-year hovering at yields that are almost historical low, just a couple of hundredths of a tick away, but bonds coming off, making that interest rate go up, just albeit slightly. Still a good environment for getting into the bond market and redoing your mortgage at a lower interest rate there. refinancing it. So coming back right down to about the point of control, we're seeing some volume pick up right here around that 180 handle. I do expect to see the volume node move up to this level relatively soon. All right, gold is off by about $3 after breaking above that 2,000 mark. It is a psychological level, you guys, and people are trying to hold on. The gold bugs are trying to hold on to that area, as you can see here, trying to push higher. But with the equities moving, it is hard to be buying into gold at all-time historical highs when we are seeing the rest of the broader equities market really make some moves to the upside. As you can see, the Dow Jones Industrial Average on the highs of the day right now at up 240 or 250 points now, but above that 9-day moving average again. Now we look over at the NASDAQ, another all-time historical high in the NASDAQ. It is breaking that whole head and shoulders pattern that I talked about earlier. We had triple or a double top there. Tweezer tops is what we used to call them on the floor. And you can see that this head and shoulders pattern where the shoulder, the head, and the other shoulder was looking pretty solid with that top yesterday, but no confirmation as we have blasted to the upside. So looks like the NASDAQ is going to have more room to the upside. Another thing to note, the big five, the FANG stocks, for lack of a better phrase, are the ones really making this market look a lot better than maybe what some of the other companies are feeling. Most of the other companies are feeling the pain, but the FANGs are really driving this market higher. As you can see with the NASDAQ up 160 points on the day, just making a massive push to the upside and really squeezing those shorts out of the market. Got me out. We can see the E-mini S&Ps up 27 points on the day, pushing above the value area. So we see the time and volume, 70% of that is just below where we currently are. Starting to peel above that, we get a settlement above that value area high, and it is going to be where the shorts are really feeling the pinch and going to want to start to cover. So the market's making nice moves, and as you can see here, E-mini S&Ps making that high intraday. NASDAQ did too, something I should have mentioned. That was an intraday high, so it is a good print. And overall market just pretty unabated to the upside, with the economic data giving it that extra boost to, as the market was trying to consolidate. But when you get that kind of data, especially out of ISM above manufacturing above 50, and then we got the new orders just knocking it out of the park, you know, back to 2018 levels when we were really seeing the economy do well. That is very bullish in my eyes. So let's talk about those trades that I put on and taken off. Actually, SPY, I put on a trade basically looking to hedge my overall portfolio, but with this pattern setup not really coming to fruition and breaking down, I decided to go and get out of the SPY. And if you remember, I put on the September, and I had sold the 300 puts in there. Or sorry, I bought the 300 puts in September. I was going to say I bought the SPY. I bought the 300 puts in SPY for $9.91. I covered those for a loss at $3.65. Again, on NASDAQ, I also played this to the downside. These were both bearish trades. I was adding negative deltas to my overall portfolio. So it was a hedge. I wasn't trying to knock it out of the park with this, but I was believing that we were starting to see some of these pattern setups to make it look like it was getting a little bit toppy. Well, with today's breakdown in that chart pattern, that's when I'm pulling the ripcord, breaking above those resistance levels that I was looking at. So kind of like my stop. I looked at it, wrote it down. This is where I'm getting out. If the market breaks this pattern, I'm not going to hold on to it anymore. And with the NASDAQ, if you guys remember, I went into the triple Qs based on that NASDAQ head and shoulders pattern that was broken today. And I had done the October and sold the 300 calls in there. So bought the 300 puts in SPY over here in the NASDAQ, sold the 300 calls in there for $2.04. I bought those back for a profit of $1.80. Not knocking it out of the park, but you can obviously see putting on that trade, setting myself up for success. I had pretty good high implied volatility when selling that strategy. Volatility came out, directional move wrong. Got theta decay helping me out as well because of the way that I did the location on that being October rather than going longer duration. I was able to get out of that for a win, despite the fact that we made a nice move to the upside against that position. So those are the things that I talk about in my webinars, where we drill down on when, where, and why. Those are two separate bearish assumptions. Obviously, the SPY didn't work out because it was going against me, and this NASDAQ going against me actually helped me out. So, NASDAQ didn't help me out, but NASDAQ went against me and it didn't necessarily hurt. I was able to cover that for a profit. So those are two scenarios where we were playing bearishness, adding some negative deltas to the portfolio. I cut the losses on that and decided to let my portfolio run at this point. If we're going to continue to break highs here, I'm going to wait for another opportunity. Yes, it is August. I spoke about this at the very beginning of the webinar, that August is usually a pretty tough time for equities, an uphill battle, if you will. I'm going to still keep my eyes on something where I'm going to need to maybe add some negative deltas, but at this point in time, I'm going to let the portfolio run to the upside until we start seeing a little bit more of a topping pattern or something like that. And if we don't, then we'll just let it ride. All right, so check it out. We're doing more webinars this week. We got a couple of them going on. As a matter of fact, I'm doing an extra one tomorrow on Tiger Shark trading. So check that one out. That's always a really good one. It's pretty quick webinars for each speaker, so it's not getting drug out. And there's going to be a lot of really good people showing up for that. All right, so make sure you check out the disclaimer wherever it is, and know that we're an educational company. I'm not trying to solicit you guys to buy or sell any of these strategies that I'm getting involved in, or directional assumptions for those underlyings. So make sure you know your risks, read over this, and if you can't take that, take it easy.